Let's take a look at your market news now. Asian markets swung on Thursday as investors considered the prospect of more U.S. interest rate hikes and Donald Trump's latest broadside in his trade war with China. The U.S. central bank lifted borrowing costs for the third time this year, as expected, citing an increasingly strong economy and jobs market, with Governor Jerome Powell saying he saw no vulnerabilities in the financial system. In Asia, markets fluctuated, but by close of trade, Tokyo was in the red by almost 1%, with Hong Kong's Hang Seng moving 0.4%. The Shanghai Composite Index also ticked down 0.5% at the close of trade. A Wall Street rally collapsed late on Wednesday as investors reduced their risk following a widely expected interest rate hike by the U.S. Federal Reserve. The Dow Jones Industrial Average tipped over by 0.4%, while the S&P 500 lost 0.33% to 2,905. Another loss was recorded on the Nasdaq, which dropped by 0.2%. For an in-depth look at what's driving markets, let's go back to the JSE. Arabile Gumede is there. Good afternoon, Arabile. Take us through the markets this afternoon.
Yeah, market movement itself has been quite negative today. Having seen Asia sitting in the red, as you pointed out there, of course, the sentiment sort of filters through to the local market. Yes, you spoke about Jerome Powell and the Fed chair deciding to hike rates there. Much expected, but certainly has helped the rand somewhat, and that helping of the rand hurts other stocks like the banking stocks here locally. But let's unpack the remainder of the local and European markets. Well, of course, I'm joined by Chantal Marks from FNB Wealth and Investment as we unpack the markets today. Chantal, 0.2% down for the JSE today. Still not helpful. Still a sort of a negative market picture we've had for quite.
Yeah, I mean, if you just market is actually trading lower. It's down 2.2% so far today, and then most of the sectors are actually trading negatively, and with the exception, of course, of financials and certain of the retailers reacting well to a slightly stronger rand.
Yeah, that stronger rand itself, how's that impacting on the likes of the banks? I mean, Capitec seems to be bucking the trend, but that comes from yesterday's earnings.
Yeah,
right?
So I mean, most of the banks should be doing better today, with the exception of probably Investec, because it has a big offshore component and it usually reacts well to a weaker rand. And then the retailers should do well as well, because if you think about it, most of the South African retailers are actually importers as well. So a stronger rand makes them more competitive because it's cheaper for them to source from overseas. So they'll be able to make some margin gains there. And yeah, I mean, the rand strength itself is actually quite an interesting one as well, because you would have expected the dollar to strengthen on the back of a more hawkish outlook by the Fed.
Exactly what I thought, yeah.
Yeah, but I mean, from what I can pick up, a lot of market commentators are kind of ascribing the stronger rand to the fact that our president came across very well at the UN yesterday. And certainty regarding plans for land reform, well, not certainty, but I mean, just sticking to the narrative on land reform has really helped maintain the currency at the moment. Yeah,
if we keep talking about, you know, policy issues, of course the mining charter comes into distinct focus, and today as well we're expecting, of course, the Minister of Mines and Mineral Resources to lash out exactly what is supposed to happen. Perhaps not so much so, but we have received a press release regarding it. A few changes.
Yeah, I mean, so it hasn't been gazetted yet, so we haven't been able to unpack it fully. And I mean, it was literally an hour or so ago when the minister came out with a statement. And very importantly, they've removed the word free from the free carry
kind of. Doesn't really change much, though.
No, it doesn't. It doesn't at all. I just think it makes it a little bit more palatable, but you still have to give a 5% interest to employees and a 5% interest to communities.
Apologies for that delay there, Nzinga, of course, and a few issues there, of course, in the gremlins. But we are still chatting, Chantal. Let's wrap up perhaps on that mining charter.
Yeah.
quite significant because it has been the key issue when it comes to policy uncertainty. Yes, we've got land, but mining has also been quite significant. And if we get that right, it'll be a win for South Africa.
Yeah, I mean, the mining charter, along with the land reform policy and telecommunications, has been really one of the stumbling blocks in order to add growth to the South African economy and entice investment. And any certainty would be positively received. And of course, this is a lot more investor friendly, this iteration of the mining charter. It seeks to strike a balance between stakeholders across spheres. And this one seems just a little bit more palatable from an investment perspective than the previous ones.
Yeah. If we head back into equity news, we have Choppies officially suspended from trade on the JSE. What exactly is going on with that stock?
It seems as if they've actually requested the suspension themselves, and it first started on the Botswanan Stock Exchange, so if it's suspended there, then the JSE suspends it here as well, just for fairness sake. But they are saying that they are going to release a statement to provide clarity on why their financial statements have been delayed, and also why their trading performance is expected to be relatively weaker, not necessarily their trading performance, but their profitability. Our sense is that it might relate to something to do with Zimbabwe. They've had some very serious issues with a JV partner there, and that it might not even be operational. But just, it's not good for a share price to be as volatile as Choppies has been over the last 3 or so days.
They had a massive rise not so long ago coming through from Botswana as well, and you thought as a retailer, the likes of which is supposed to challenge, the likes of ShopRite, etc., you thought at least it creates a really great market. It seems, however, they haven't lived up to that billing. Yeah,
I mean, they've struggled in South Africa to get to profitability, because South Africa is a completely different market to Botswana, where they are very, very strong. I mean, they absolutely lead the market there. But in South Africa, you're contending with a lot more competitors. So you've also got the likes of a Pick n Pay and a Spar in here. And then you have stuff like security costs, which is something that they don't actually have in Botswana, and security-related stock losses. So SA has been a bit of a challenge for them. And then, as I mentioned, some of the other markets outside of Botswana and South Africa, Zimbabwe being very, very tough for them with that JV partner. And then they've also been spending a lot of money kind of going into Kenya and Tanzania and trying to expand their footprint towards the north. So that's also been costing them. But operationally, they actually haven't been performing too badly.
Yeah. Very quickly, Naspers down 2.25%. That hurts from Tencent's point of view, isn't it?
Yeah, so Tencent was down 1.5% more or less in China this morning. And then with the rand strengthening, you could probably kind of make up the rest of that difference there. Why is Tencent so weak? We have no idea. I suspect it might be in sympathy with Facebook. That company announcing that the Instagram founders are actually leaving it pretty soon.
Quite interesting indeed. That market movement down 2.25% there. And as we always say, when Tencent sneezes, Naspers certainly catches the cold, and thus the JSE as well. Down, if we get a look there, 2/3% for the JSE all share. A better mark as well for the Rand. Nzinga, it's back to you.
Thanks so much, Arabile.